5,000 has come so quickly. And I mean, like you said, we're not that far from 6,000 at this point. So I think that, again, a lot of people are buying into this fear that I think is warranted, but it's really propelling gold ahead of what potentially is going to happen. But I do think there is a breaking point. I think at 10,000, if we're getting to 10,000 in the next few years, things have deteriorated sizably in the US economy and probably the global economy, and maybe even geopolitically, it's even worse than it is now.
It doesn't drop 20% a day like Bitcoin did, right? So even a big correction in gold is like 34%. Like that's a pretty darn big correction for gold. Bitcoin can do that in a few days. And I believe in physical metals. I'm not a big crypto guy, as most people know. So I like to invest in stuff that I believe in, that I believe has, solid value.
Okay.
So that's where I would go. And I think long term, I think gold's, going to be breaking 10,000 and beyond, but there's a roller coaster ride in between now and that high target.
Gold has rapidly ascended to $5,000 and is now targeting $6,000, driven by warranted fears regarding the stability of the global financial system. However, analysts warn that a move to the $10,000 milestone would signal a catastrophic deterioration in both the U.S. economy and the geopolitical landscape. Gareth Soloway, Chief Market Strategist at VerifiedInvesting, and Chris Vermeulen, founder of the Technical Traders, discuss this critical divergence, highlighting the fundamental volatility gap between digital and physical assets. They emphasize that, unlike Bitcoin, which can suffer devastating 20% crashes in a single day, gold offers superior stability. A major correction for the metal is typically limited to just 3 to 4%. This resilience makes physical bullion the preferred vehicle for investors seeking solid value rather than the extreme variance of crypto assets. While the long-term path is bullish, investors must prepare for a roller coaster ride as the market prices in this new reality. Now, we present the clips from Gareth Soloway and Chris Vermeulen's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
6,000 at this point would be, unless something changes, right? And so if we flip back to the gold chart here, at this point, again, if we look at certain trend lines, right, and I'm a trend line trader, is that you really don't have anything, right? We've gone through this level here. We've pushed through that. We had a parallel here of support, which kind of mirrored this right here, and we've now blown through. And so this is the thing, is when you get in price discovery, sometimes as a technician, you just have to step back and say, hey, listen, it'll go until it stalls. And once more sellers come out of the woodwork or something occurs, then it will have its dump. And then I can start trading it again based on technicals. But right now, the technicals are out the window. I would explain it like if they understood what a meme coin was, I would explain silver, not gold, but silver right now is more of a meme. You have the same verbiage as it'll never come down. It's a new, new paradigm or all of these kind of same things that are going on. And we can flip over to the silver chart to take a look. Silver had a good day today, but gold, interestingly enough, is the one that made a new all-time high. Silver did not quite make a new all-time high and still has a topping tail in the daily chart here. And this is a technical reversal that we saw a couple days ago on silver. That, until we have a daily close above it, that is now in stone as a top signal for silver. And again, it could be negated tomorrow. I'll be watching, but at least in this situation, and it is so similar, the same way, if I ever say anything negative on silver, the attacks on YouTube, they are massive. Just like if I ever back in 2021 said something about Dogecoin, if I ever spoke against that, it was the same sort of psychological impact and reversal. So I do think we're there, at least on silver. Gold is obviously harder to pinpoint, and I'm a big holder of long-term gold. I've been a big holder for years. In fact, I think a couple years ago it was my top pick with you on your show at the end of the year for performance back, I think it was 2022 or 2023. But ultimately, again, the excitement around it has made it an overcrowded trade. A lot of what we call in the trading world is the weak hands. The weak hands are the ones that buy in late and then they expect to get rich quick. And again, you compare that to those of us that have held gold since 2015 or 2010 or 2019, where we were just like sitting there watching everything else go up. And we're like, but we really understand the financial reason for holding gold here. And now we're getting the payout, right? But those players that buy late that are doing it to get rich, those will be the ones that get flushed out. The rest will it'll then start to head back higher and probably make new all-time highs. I still think it's going to 10,000. The question is in what year? You know, at 10,000 in gold, I would assume we are at a whole new scenario of dollar or de-dollarization. I would think, and I think honestly, that's a big thing of what's going on right now. If we look at the US dollar, we've just seen one of the biggest drops. In fact, the biggest drop in the DXY since the tariffs were levied last March or April in a 7-day span, right? So 7 days down like this. Now, part of this is intervention with Japan, right? We're trying to prop up there, and you played that clip from the FOMC press conference. But at the same time, you are at a pivotal road. Look at this on the DXY. This is scary, folks. So this is your financial crisis low on the dollar, just as we were getting into the heat of the financial crisis. This was June 2008. And look at this zone of support. The dollar has been riding up. Now, we've heard about de-dollarization for ages, but until this breaks, I'm not a real believer, but it's looking like it's getting ready to break. And once this breaks, there's probably no stopping the US dollar from depreciating maybe as low as the financial crisis lows back to the low 70s on the DXY. And that's a scary scenario because remember, this is going to import inflation, folks. A weaker dollar, when we import so much of our goods, it is going to bring inflation up. And then you look at copper, then you look at silver, palladium, platinum, all of these things, live cattle prices, all near all-time highs. Now, listen, grains are still low. I still actually like those as a defensive play, but there is bubbling up inflation. And I do think that's the kind of the scary part for 2026 that could surprise the market, right? The economy, we heard from Jerome Powell today, the economy's hanging in there. It's still looking a little bit better. But what about inflation? Because I look everywhere and I'm seeing inflation bubbling up, and I have a feeling everyone watching is seeing the same thing.
Silver's holding up. Silver's got a lot of momentum, as you just mentioned. Yeah. And it's kind of a feeding frenzy in there. So it hit that $100 kind of whole number, that mental resistance level. A lot of people will say if it hits 100, I'm going to sell. Silver held above that and closed. And I think that has to do with it's a small market and a lot of people are catching on to it. And even if people were selling at the 100 mark, which we saw a heavy volume, there's still a ton of buyers jumping in because it hit 100 and it's getting people with FOMO and people who are new to it saying, I want in before it goes even higher. So I think there's enough momentum in silver to keep pushing and holding it through that resistance. Gold is a slower moving beast. 5,000 is a pretty big number. It just has a bit different characteristic to how it moves. But gold definitely has a lot of momentum here. I don't think we're quite in that euphoric blow-off phase. I mean, I think we're close. I think we're like weeks away potentially from a huge spike in gold and silver. But I mean, it could be very short-lived. It'll be swift. It'll feel good. I believe silver and gold are in the final push higher, and I think we're going to see them peak out, and we could see a big correction. I think we could see a 30 to 60% correction in metals. And so knowing that and the sentiment where it is right now, because I believe it's very crowded, but I do think there's still more, hate to say it, but like suckers who are going to get squeezed in and buy in this feeding frenzy and drive it higher. You do at some point have to be like, okay, it's almost over. I'm going to start protecting and start to scale out of these positions and lock in some gains. And at some point, you just have to be happy by leaving a little bit on the table. Bubbles like what we're in right now, where silver, if you look at the monthly chart, it's gone straight up. At some point, it's probably going to have a very sharp correction and come straight back down. And you just have to be happy saying, you know what, I caught a huge chunk of this. I don't care if it spikes up temporarily a little higher without me. I want to lock in some of my profits. And that's where we're getting close to, is I'm about to start trimming off some positions as soon as I see some more significant signs that it's getting closer to a peak in this bubble. Bubbles are very hard. You can't really predict them, and you don't know where the top is. So at some point, you just start scaling out when you're satisfied, and you're not going to panic if it keeps going higher without you. Gold to me is much more stable. It doesn't drop 20% a day like Bitcoin did, right? So even a big correction in gold is like 34%. Like that's a pretty darn big correction for gold. Bitcoin can do that in a few days. And I believe in physical metals. I'm not a big crypto guy, as most people know. So I like to invest in stuff that I believe in, that I believe has, solid value.
Okay.
So that's where I would go. And I think long term, I think gold's, going to be breaking 10,000 and beyond, but there's a roller coaster ride in between now and that high target.
Technical analysis indicates that silver has transitioned from a fundamental trade to a meme-like frenzy, exhibiting psychological patterns similar to the 2021 crypto mania. While gold consistently breaches all-time highs near $6,000, silver's aggressive hold above the $100 level suggests a market driven by fear of missing out, FOMO, rather than technical discipline. However, chartists warn that this euphoric blow-off phase often precedes a severe correction. Models predict a potential 30% to 60% drawdown in precious metals once the momentum stalls, flushing out weak hands who entered the market late in search of quick riches. Simultaneously, the US dollar index, DXY, is testing critical support levels dating back to the 2008 financial crisis. A breakdown here would trigger a massive wave of imported inflation, driving commodities like copper and cattle even higher. While the long-term target for gold remains $10,000, such a valuation implies a complete scenario of de-dollarization and economic deterioration. Investors are advised to treat this current vertical move as a bubble, prioritizing profit-taking and scaling out of positions rather than chasing prices into the inevitable reversal. Let's get back to the interview.
I would have thought it would have been this pierce of $5,000 per ounce. We have not seen that yet. Now, what we can do is go to the logarithmic chart and start to take a look here and see. So I flipped it to the logarithmic chart and we go back here. And what we do is if we flip over to a larger time frame, we start to notice that, again, you've had this incredible move in the 1970s into 1980, this long base, another incredible move here, and a consolidation base that was shorter. And by the way, think about this. So, and this is just a little side note, but it's fascinating. Look at how long the consolidation base was here, and look at how long the consolidation base was here. Much shorter in the 2010 to 20 range. Now, why? Ask yourself why. Because here, this is where we actually had fiscal responsibility. We actually had a balanced budget at one point. Here, no balanced budget. And the problem is these down cycles in gold, if we continue on this trajectory, are going to get shorter and shorter. So wherever gold tops, and I'm not going to pretend I know at this point, it's going to be a much shorter bear period or consolidation period unless the fiscal restraint is restored. And that's really the key crux here, folks. I mean, it just comes down to people rushing to diversify to protect themselves. They're buying insurance on a sinking ship. We see the ship sinking. We've got to buy insurance. My guess is, and it's hard to know the top, but my guess is when we look at the reversion here, and let's take it off the logarithmic chart, is what we'll start to see is a retrace to a reasonable pullback level. Like right here, we could see on the move up, this is where we stalled out, which means when we do correct, this 4,300 likely becomes your next base point, right? That's where you're going to hold on to the major gains most likely and potentially turn up unless we see that fiscal responsibility built in. Now, David, you remember I think it was 2013 or 2012, the countries like Italy, Greece, remember the market eventually imposes austerity by certain means. And I do think the US is going to face that within multiple years, maybe within 3 years. The markets themselves will start to impose austerity regardless of whether our political players do.
Silver could spike to 120, 130, 140. We could see a very big parabolic spike. It's kind of one of those last pushes. And I think gold's going to do something similar. Right now, silver has about 3% upside for my target based on technical charts, where price should go. After that, it's however sentiment takes it after that. And I think we could see it go higher. Obviously, we're in this feeding frenzy right now, and I think it's actually still picking up speed.
Yeah.
So I think people are going to be pretty excited to see where silver is probably in a week or two from now. When the price is going up, obviously we follow price from a technical standpoint. So price action has to be an uptrend. If the trend starts to go sideways for too long, it loses momentum. We've got about 12 different things that we track. We've intermarket analysis, a bunch of different assets. We use cycles, we use time, we use price trends, all that stuff. So when price starts to go sideways or starts to break down, lower highs, lower lows, that trend is over. It's not going up anymore. So that's one of the things that'll kick us out of a trade. We also have position management. So if something falls, say 5% or something, it'll trigger our strategy to say, hey, this trade just isn't working out. Let's cut our losses, wait for a fresh new setup. So sometimes we don't even have to wait for the trend to turn around. We just need a pullback of a certain significance that is telling us that there's a few things underneath the hood that are showing weakness. So we can sometimes have 6 or 7 indicators saying gold looks like it's going to top. And, just because we have those doesn't mean it's topping, but our strategy could tell us this trend is slowing, it's stalling out, and we might actually get out before price actually even drops. We've done this many times in the equities market. Our system has a way of identifying money flows and trends internal. The market internals tell us, is this a pause, or has it actually totally lost its mojo and it's about to head lower? So it comes down to price action and then position management. There's those two triggers. I like miners, but the fact that they have all taken off and we're seeing silver go parabolic, there's a common kind of move here where everybody's kind of just piling into the space. So I feel like it's pretty frothy. I think miners still have some upside, but overall, they've had a huge chunk of their move. And I know a lot of people have held miners, from the 2011 market peak. And really, when you look at the monthly chart, like from silver and gold and miners specifically, they've held for like a decade. And then in a few months, finally, they've got these big returns. And because they've held it for 10 or 13 years, a lot of people think that this move that's only really a few months old is just starting. It's just the beginning. But to me, all the signs to me are saying, hey, you know what? I think we're about to actually see it come to an end. And usually when everybody's super bullish and think it's just starting, usually it's coming to an end. So from a psychology play, I think miners they've valued in the current price. I think there's a bit more upside, but I'm nervous. I think they're going to have a big correction, which is going to be an opportunity. I think that this next pullback is a huge opportunity, because once we have this pullback and say a financial reset, it'll be like 2009 to 2011 again. People won't focus so much, I think, on physical. They're all going to be focusing on the miners. Yeah. And that's where I think you're going to get the big leverage play in that space, which is going to have some big opportunity.
Historical analysis of gold charts reveals a critical shift. Consolidation periods are shrinking drastically. Unlike the decades-long bases formed during eras of fiscal responsibility, today's lack of a balanced budget is forcing investors to buy insurance on a sinking ship at an accelerating rate. This structural change suggests that future bear markets will be brief, with gold likely establishing a new high-level floor around $4,300 during the next retrace, rather than collapsing to previous lows. While silver is technically positioned for a final parabolic spike toward $120 to $140, the mining sector appears dangerously frothy after its vertical ascent. Indicators suggest the trade is overcrowded, with late entrants expecting the move to be just getting started. However, seasoned analysts view this potential top not as an exit, but as a setup. The impending correction will likely provide a financial reset, offering the ultimate opportunity to accumulate miners before the next major leg up. Share your thoughts on their analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.